Hey traders, and welcome to weekly analysis session. If you guys are new, my name is Alexander Nikitin, and typically in these videos I'm showing you the high probability setups that may happen next week, as well as I explain you some aspects of technical analysis, cycle Jones trading, money management, and all that trading related stuff. Okay, let us start. The first pair for today is pound dollar. Open the chart. By default, it already runs the MPS5 pattern recognition software, and it has these patterns: cipher, butterfly, and custom pattern. A custom pattern is a unified Gartley. It is the pattern that I have created, and the details for that pattern are these. So 44.1, 73.6 is the B point, and the C point is standard, and the completion to invalidation is pretty standard for a Gartley pattern. Okay, so we have a unified Gartley, and it already went to hit the first target. Let me first explain you what these levels mean. Initially, you enter here, you stop your initial stop loss here, and you place your initial targets here, target 1, target 2. It is supposed that when target 1 is hit, you close at least half of your position, and when target 2 is hit, you close the rest. But your trade management is actually up to your discretion. So we have these price behaviors. Price may go straight through, or it can give a kind of bounce to the downside. So later today I will tell you what is the probability of going straight through and what is the probability of giving you a bounce. After this, once it gives you a bounce to this, it doesn't go straight through. This means that it gives you some bounce to half. This level is half of your distance, and this level is half of your distance of this distance. So your stop loss, your 1, 1, 1, and this one is half. Okay, so when it hits half, there is a probability you move your stop loss from initial distance to this level. So you cut your loss by half. There is a probability that price reverses, and there is a probability that price continues. Okay, if price reverses, then you close it at a stop loss. If it continues, then you close half of your position and you move your stop loss here. You see, and again, there are two kind of price behaviors. It can reverse and hit your stop loss, or it can continue and hit your take profit. Okay, at this level, when it hits your stop loss, you have 0. It is a break-even situation. Now let's talk about the probabilities. So I will delete all these lines. So as I told you, the first thing that we should keep in mind that price may go straight through and hit the initial stop loss. And the probability for this to happen, let me type something, the probability for this to happen equals to 30.82 of total trades. And of course, if this doesn't happen, yes, then we have something that is different from that. What is 100 minus 30.82? It is 69.18. Yes, 69.18% probability that it will give us some kind of reaction. So what I mean by this some kind of reaction, it means that it at least hits this level. So 69.18 that it will go to hit this level. Okay, then now let's calculate further. We already know what happens here, but when it hits this level, what are the probabilities for further? It can go to the upside and hit our new stop loss, or it can go to the downside and hit the first target level. So what are the probabilities for this behavior? And the probabilities are as follows. There is a 28.7% probability that it will go to the upside, and versus 28.7% probability versus 71.30% probability that it will go to the downside. So what it means, we already don't have these trades. Yes, out of 100 trades, just suppose that 30 trades are straight losses, 30 trades. Then you have 70 trades, and out of 70 trades, what is the situation? 28 that will go here, and 71 that will go here, if you calculate it in trades. Yes, 28 trades will go to the upside, 71 will go to the downside. But if you want to know the behavior compared to total trades, then it is this. It is 19.85% probability for the first scenario, and it is actually 49.33 for the second. Okay, so just in brackets. So when you place your trade, initially, you have 30% probability of going straight through. You have 19% probability of going first to your half and reverse to stop loss, and 49% probability that it will go initially from here to here straight through to the downside. Do you understand this? Okay, so 49% probability that it will go to hit your first target. Okay, it is calculated from initial, but when you hit it already, you have different probabilities because you don't have those trades that can turn into your full stop loss. You don't have them. You only have those that can be turned into half stop loss, because you move your half stop loss to half. That's why probabilities change. You have less trades, of course, and that's why you have higher probability for price to continue rather than reverse. Okay, at this very point you have very, very high probability. You can also create a strategy based on this. Just enter here, place your stop loss here, and place your take profit here. I don't say that it will give you a very large expectancy, although the probability of continuation is very high, but due to negative risk to reward, you see it is twice less, yes, than the reward. The risk is twice greater than reward. Reward is twice less than the risk. Due to this, your expectancy will stay somewhere around this number, almost zero, almost nothing. Okay, so let's go to the next step. Okay, the next step is this. Price continues further. We already know what if it reverses, but what if continues further? And again, we have two situations. First, we move our stop loss to this level, yes? And what is the situation for price to move here? And what is the probability for price to move there? And they are as follows. You should know these numbers, all the numbers, before you place in your trade, and all these numbers should be based on your backtesting on your market research. Okay, so the probability for price to reverse and hit your break-even level, yes, equals to 44.03. It is 44.03%. And the probability for price to continue further equals 100 minus 44. It is 56 minus 0. It is 55.97. Yes, 55.97% probability that it will continue to the downside. You see that at this very point you have 44% probability of price to go higher and hit your break-even, and you have 56% probability that price will continue further. And here we have a very good situation. So you can create a strategy based on this, and this strategy will have a very good expectancy of somewhat around this number, 0.15 or something. You place your initial 1-to-1 stop loss to target, yes, but you have a larger probability of hitting this level. So after the pattern hits the first level, the price action unfolds this. At this very point, you can sell it, placing stop loss here and target here. Very, very nice strategy with a very good expectancy. Of course, selling it here, placing your take profit here is the best expectancy, but the one that I'm talking about, is also good. I know some traders that selling it here, and at this level they are adding to their positions, adding more, because there is a great probability for price to continue lower, high probability setup at this very point. So right now we have a high probability setup for price to continue lower. I say high probability because it is higher probability than reversal. Of course, 44% of trades will go to the upside, but the 56% will go to the downside. Okay, and what is this number? What is this number of totals? Let me change it. Of course, if we calculate totals, it is this 21.72% probability of total trades. And this one is 27.61 of total trades. 27.61% of total trades. When you set this initially, you know that you have 21% probability of having break-even, having the break-even bounce of that level. And at this point, when you set the trade and nothing yet happened, initially you have this probability of hitting your level, 27.61. Okay, hope you understood these numbers, hope you understood what they mean and what is the probability. So based on this, there is a 56% probability that it will go lower, and there is 44% probability that it will bounce to the upside. So you just draw conclusions. I'm showing you the probability. What are these probabilities based on? They are based on my market research of the Unified Godly, and this is a very deep research. I'll just show it to you. So the research is this. I tested euro dollar, dollar yen, pound dollar, euro yen, Aussie dollar, pound yen, and right now I'm testing dollar Canadian. You see I'm at this starting 1999 and I am at the 2004. Not yet good results, but other pairs are this. So I compiled them together, those that I finished, starting from 99, ending 2018. So I found total 2,836 trades. You see that? And here are the numbers and statistical calculations. So what is the probability of hitting winner, what is the probability of hitting loss, and so on and so forth. So these probabilities are not something that is taken from books. It is not something that is that was told by anybody to me. It is something that is based on my market research, and the market research was performed with this very NPS5 pattern recognition software. Simply scroll it to the downside and type it. When it is a win, it is a win. When it is a loss, it is a loss. Simply type it. So the patterns are already drawn on history. Very, very comfortable for that. And it gives another advantage. It gives an advantage of being objective. It gives an objectivity. Because the patterns that were drawn on history will be drawn for real-time trading exactly the same way. And this gives an objectivity. So what you have calculated in your backtesting, in your market research, you can be sure it is guaranteed that you will have these very setups for real-time trading, because the algorithm is the same. Okay, close it. Let's go to next pair, and you will draw conclusions yourself. We have a butterfly pattern. With butterfly, I don't use this method of trade management. Butterfly is pretty the same. You stretch your fibs from A to D, and you set your targets to 382 and 61A. I don't have these levels here, but your first target is 382, second target is 61A. So this is Euro Yen. Butterfly is already completed. Now let's go next. Nothing on Pound Yen. Let's go next. Euro Dollar. Didn't complete, just missed the entry. Okay, it happens. Dollar Yen. This is the situation when it goes straight through and hits the stop loss. No reversal happened on Dollar Yen. Aussie Dollar, Australian Dollar. Nothing here. Dollar Canadian. Dollar Canadian. So although we have a potential unified Gartley, look at this consolidation period. From here to here we were moving sideways, and we guys know that after consolidation, if it is broken to the downside, there is a high probability for price to continue lower to the downside after those consolidation levels are broken, rather than to bounce. So I expect the price to bounce here if we do not break. If we break this level, decisively break, yes, we have that big black candle, another black candle closing below this level, then it makes no sense to buy. Basically it will go to the downside. So just avoid this situation when the price is consolidating near the completion of the pattern. Okay, New Zealand dollar, potential cipher pattern, but I think it is already invalidated. So let me check it. What if I draw the pattern based on this new situation? Yes, it is invalidated. So no cipher here because price moved and closed below this C point. If it would go straight, then the cipher would be valid. Okay, Pound Aussie is the next one. This unified Gartley is invalidated. Nothing here. Euro GBP. Nothing is there. No trading setups. Euro Aussie. Nothing. Aussie Yen. Nothing. Euro Canadian. Oh, wonderful unified Gartley that is setting up right now. Euro Canadian. Very clear cut, something that is seen to everybody. A unified Gartley with these levels. Okay, so this is a Euro Canadian. Euro Canadian. I'm taking some notes. Now, what to pay attention next week. Let's continue. Pound Canadian. what is there? We have this butterfly pattern that is running right now. Okay, basically it hit some targets. We already had some reaction, and this is a unified Gartley. The unified Gartley is still valid, so if price will move in this fashion from here to here, you see, simply recalculate it from different points. So violation of the C point is not yet an invalidation of the pattern, so it can go this way higher to complete the pattern. New Zealand yen is the next one, so nothing is there. Let me close it. Euro New Zealand, nothing. Canadian yen, we have this butterfly pattern completed. Okay, initially we had this bounce to the downside, but it didn't unfold into a good reversal, and now we have obviously broken to the upside. So basically this pattern is rather a continuation pattern than a reversal pattern. You see, the reversal failed. We started the reversal and then we brought it to the upside. It is a continuation to the upside rather than reversal. Okay, Aussie Canadian, we have nothing here. Okay, the rest of my Forex pairs, I actually don't trade them, but what I'm interested in this Euro Ruble. This is my native currency, nothing is there, and Dollar Ruble. Here it is. Okay, nothing is there as well. Now, what else do we have? Let's go to check silver. Nothing on silver. Checking gold. Okay, a potential unified Gartley on gold, daily time frame, very good unified Gartley with very good probability, a high probability to have at least some reaction. Okay, so this is daily. Now guys, let's go to check Bitcoin. So what is the Bitcoin? Two probabilities, two potential pattern. If it declines, we have a bullish pattern. If it continues higher, then we have a bearish pattern. Either this or that. So the numbers are in front of your eyes, they are on the chart. Okay, let's go to check Ethereum. There are not very many. Okay, then Litecoin. Okay, not very many data. Not enough data. Let's go to check oil. So Brent oil. Nothing is there on daily. Then go to WTI. Crude oil. Potential cipher pattern very far from completion. If price goes here to hit this 65.96, then we have a high probability bounce. Right now it is nothing, almost nothing. Okay, let's check some indexes. CAC 40. Nice consolidation period, bleeds patterns, pattern after pattern after pattern, and so on. Okay, right now we have nothing. We consolidate, but we do not form any pattern. Okay, HSI 50. Nothing is there. Then we go to NQ100. So what we have a potential unified Gartley and a cipher pattern at the same time. So if it declines, I don't know if it will ever decline there, but if it declines, we'll have a pattern. DAX 30, German 30. Wonderful butterfly pattern that worked, very good. And also unified Gartley worked. So I mean this larger unified Gartley worked. And we'll have a potential cipher pattern that is setting up. So if price goes here to hit this 1266, then we'll have a high probability of decline. Before that, there is nothing. Simply go to other pairs. FTSE. Let's open this to check what is there. Loading new data. So nothing is there. Then let's go to Nikkei. Load some data. Nothing. So this is what I was talking about when it violates the pattern, breaking through with this big candle. There is a higher probability of continuation rather than reversal. So the pattern also shows you a continuation, not only reversals. And S&P 500. Download some data. Okay, nothing is there. That's it. So I think it is done. So I just analyzed Forex pairs, cryptos, gold, silver, oil, some indexes to have some opportunity. What I would pay attention to, one of my favorite, is the pound dollar sell at market. Let me open it once again. Selling at market because we have a high probability of continuation. And I would also pay attention to Euro Canadian. It is my preference. Buy with this potential unified Gartley. It is almost completed, so if it goes slightly lower, then there is a good probability of bounce for this unified Gartley. Okay guys, hope you like this video. Hit that thumbs up, share this video on social media. Your support is valuable for me. And until then, good luck and good trading. Hope to see you soon.